Welcome to this series where I'm about to share with us 50 tips, 50 strategies that would help you stop losing money ever in crypto trading. Over my years of experience, I have come to understand that you can do trading without losing money. And this is what I have practicalized and I'm going to be sharing with us in this series. So you want to stay with us. One very common mistake we make as traders or even beginners coming into trading is we want to focus on getting the knowledge and then wanting to make money, right? We don't learn about risk management. We don't learn about how to stop losses. When we focus on winning, we learn more about winning. We don't learn things about losing. And that is how we fall victims and we learn through mistakes. Some persons might give up along the line because they find it difficult to manage losses and they don't have the knowledge on how to stop losses. If all I've said interests you, you want to give this video a thumbs up and also subscribe to my channel. You'll also want to turn on the notification bell on this channel because I'm going to be dropping videos daily, teaching you these things, all right? And trust me, at the end of the series, you're going to be a better trader. You're going to be a more profitable trader. Before now, one of the financial principles that I hold dearly in my heart is if you are a trader, you should be open to losing money. If you're too conscious of losing, you are even going to lose more. Right now, I'm not even open to losing money. Honestly, I don't go into trade with the mind of wanting to lose a particular amount of money. And before you go into trade, you should have some level of confidence. This is what you're going to be learning from this series as well. To kick off these 50 strategies or 50 principles that will help you stop losing money as a trader, I'm going to share 2 with us in this video. If you want to stop losing money completely as a trader, the first thing you need to recheck is your capital. Yes, I know you didn't expect that. It is very possible to blow your accounts when you're trading with huge sum, and it is also very possible, in fact, so likely to blow a small account. Now, what is the secret behind all of this? The one thing you want to know is check how much you want to make from the market. Most times, it is your trading capital that determines how much you're supposed to make per trade. It is your trading capital that determines how many trades you should go in per time. It is your trading capital that determines what leverage you should use, what margin you should use. And all of these, you need to learn them so that you don't begin to use wrong leverage, the wrong margin, and then go into multiple trades that you're not supposed to go to with a particular account. Your trading capital will also determine the kind of volatility you enter. For every coin pair or every market you're trading, you would want to understand the volatility of that market. And if you don't have the proper knowledge on how volatility works and how it is applied to your trading capital, you're going to be losing money. So stay with me as I show you very quickly how you can understand trading capital and some of the things that would influence you not losing money with either a big or a small trading capital. All right, guys. Now see what we have here. This is the trading capital. This is the maximum leverage. This is the maximum trade you should enter with this capital and with this leverage. And this is the margin per trade. So how much are you going to use for every trade? This is what you should use depending on the accounts that you're trading with. So for a $100 account, you're supposed to be trading a maximum of 10x. This is your leverage, and you're supposed to go into one trade. Don't go more than one trade when you're using a $100 to trade, and your maximum margin for this one trade should be 20. As we proceed in this series, I'm going to explain how to identify, volatile markets and what you should do in every volatile market. Meanwhile, you should just maintain these trades, maximum trade, and maintain this margin for now. If you're using a $500 account, you should not go beyond 10x. This is to manage your risks and also help you not lose money. The maximum trade you should enter for a $500 account is 3 trades. Don't go into more than 3 trades. And for each trade, you should go in with $50. If you don't want to go into 3 trades, let's say you want to go into one trade for a $500 account, you can multiply 50 by 3, which is 150. So if you're going into one trade here, you should be using 150, which is the maximum for margin on a $500 account. And then we have the $1,000 account. If you're using a $1,000 account, you can increase your leverage to 20x. Don't go beyond this, all right? And a maximum of 5 trades, and you are going to be using 70 as your margin per trade. So like I explained, for the $500 account, if you want to go into one trade for a $1,000 account, you simply would have to multiply 70 by 5, which should be 350 or thereabout. So your maximum margin for one trade on a $1,000 account shouldn't be more than 350. This is how you can calculate how many leverage to use per account, how many trades you should enter, or the maximum margin. With a $100 account, don't use this margin, don't use this. It is very wrong. Some of you would be using $500 account to trade and you're using this, No, it is wrong. Well, if you want to use $1,000 accounts with a 10x, it is a welcome idea, just that it is going to reduce how much you would make. If you watched to this point, then I believe you're getting value so far. And I want to say congratulations, because if you're already a trader, you are about to stop losing money. And if you are coming into trading, this is a nice startup for you, because you will never have to experience losing and even giving up along the line before you learn how to do it properly. I want you to take our time and congratulate yourself in advance for taking this bold step, because it is definitely going to help you. As part of the 50 strategies that I'm going to share with us that will help us stop losing money completely as a trader, the number 2 on my list is patience. When we talk about patience in trading, a lot of times people mistake this for waiting for your take profits or waiting to exit the market. In as much as it is good that you wait for your price to hit target, hitting target or taking profits is relative. You can be waiting for 30%, somebody else is waiting for just 10%, while somebody else is waiting for 50%, and so on. There is no general take profits, okay? It is all relative. It all depends on your level of greed. And I'm also going to be showing us along the line how to interpret this greed and how to take proper interest from every trade, all right? But patience in this context is trying to let you understand the entry points. If you enter any trade at the right time, you're definitely going to start making money before any other person. In every project, especially crypto trading, there are a lot of advantages when you go in early. Most times we go into projects at the wrong time. We go into trades at the wrong time. You hear somebody tell you about buying an asset and then you go straight into it without trying to understand whether it is the right time or the wrong time to enter that trade. So how do you understand the right entry for every trade? I'm going to share with us everything about entry points. The best time to trade from different location or time zone, if you're living in Nigeria, in Canada, if you're living in US, UK, and whatever time zone you are in, the best time to trade, I'm going to share that with us. Before I jump right into it, let's take out 3 seconds to wait for those who have not yet subscribed to my channel. So 1, 2, 3. I believe you've done that. Also drop in the comment section if you are getting value so far. I want everybody to tag along because this is extremely life-changing. Let's go. So in trying to understand the right entry points, I'm going to use these Bitcoin charts as illustration for us. This is the 1 week chart time frame, and you can see I already identified the supply and demand zone. These are basic stuff that you should know. You can see the current Bitcoin price is at 37.7 something, and right now Bitcoin is actually bullish. You can see the next resistance level here is 42,000, and from here we have 47, but closer to it is 35,500, which is a support level down. Are we going up or are we still going to come down? Either ways, you will still need to have patience if you want to buy or you want to sell. Now, this analysis, if I decide to eventually give a long to 42 because I feel the market is generally bullish, and of course because we just broke out of this guy here, okay, I would want to wait for a little bit of retracements. Remember, I'm using a higher time frame, and my decision right now is I want to long Bitcoin. This is how I am going to do my entry. I would go to 1 hour or even 30 minutes or 4 hours. So this is a clear picture of 1 hour time frame for Bitcoin USDT right now, and you can see this guy is really bullish. See the time right here, 14:52, which means this candlestick is going to close pretty soon, in the next 8 minutes, you can see, or less than 8 minutes. So if I want to get a right entry point, I would have to wait for this candlestick to completely close, and when it closes, I'm expecting the next candlestick that comes up to have a retracement, somewhere around 37,500 or even below before I go into this trade. Let's check the 4 hours, for example. If you check the 4 hours candlestick, you see this 4 hours was initiated 12 p.m., which means it is going to close in the next 1 hour and few minutes, because this is where patience comes in. This candlestick will definitely have a retracement, and if you want to have a long for Bitcoin right now, you would want to wait for it to come back down. Now, this coming back down does not just mean when price comes, when there is a little bit of retracement, you're going to enter. You will still have to confirm the next candlestick, because as it is right now, there is no way to make your conclusion with this current candlestick. It has to close for you to completely make a decision out of it. All right. Remember, we make analysis using candlestick charts that are already printed and not the ones that are ongoing. So this ongoing candlestick shouldn't be a basis for your analysis. So you would want to wait for it to close, and you don't wait for a retracement as well. You can see what happened here. Okay, we attempted breaking out of this place, price fell. We attempted, price fell, and then we broke out of it. There is no way Bitcoin, will continue to go up without having some little fall, except for some cases where the market is being manipulated, or there is some sort of news that would contribute or inspire this kind of spike. Okay, otherwise sellers are definitely going to sell and buyers will definitely want to buy. This is why the price keeps going up and down. On the 5-minute chart, you can see what has been happening. From here, we came down, went back up, came down gradually, made a higher high, came back and made a higher high, came back, made a higher high. So there is a probability, or there's a possibility of the price actually falling back down before going up if we are generally bullish on Bitcoin. So the right time to enter is to wait for a proper retracement, and this retracement is going to be, what you want it to be based on your analysis. So number one, where do you want to enter this trade? You can see that we are having a retracement. I might say, okay, I'm going to buy Bitcoin when this candlestick closes, above 37, and the next one falls a bit below, 37,500 or within 37,500. That would be an entry point for me. After making this decision, the next thing is to wait. No matter who is motivating you to enter the trade, you would have to be patient, because if you don't, that is where your failure starts from. That is where you start losing. So no matter how volatile the market is, no matter how much you think you are missing, fear of missing out would even make you miss more if you are not patient. When you see a green candlestick like this, it shouldn't be a reason why you are buying or selling at that point. You want to wait for whatever you are analyzing, whatever you are seeing the market to be. You don't trade with emotions, you trade with facts, you trade with results. All right, it is better to miss a trade than to go into it wrongly. So you want to always go into trades rightly. So far, I believe this video has been helpful and you have learned a lot today. Don't forget to give it a thumbs up, and you can also share with as many as you want to help with this information. Right, don't forget also to turn on your notification bell. You definitely want to be among the first persons that would get notified when I drop the next one. Thank you, and thank you for watching.